Unlocking the secrets of BIL ETF, everything professional investors need to know. What does BIL stand for in the context of ETFs? Answer: C. SPDR Bloomberg 1 to 3 month T-bill ETF. Explanation: BIL is the ticker symbol for the SPDR Bloomberg 1 to 3 month T-bill ETF, which tracks the performance of U.S. Treasury bills with maturities between 1 and 3 months. What is the primary investment objective of BIL ETF? Answer: C. Replication of short-term U.S. Treasury bills performance. Explanation: the primary objective of the BIL ETF is to provide investment results that, before fees and expenses, correspond generally to the price and yield performance of the Bloomberg 1 to 3 month U.S. Treasury bill index. What is the typical duration of the Treasury bills held by BIL ETF? Answer: B. 1 to 3 months. Explanation: BIL ETF invests in U.S. Treasury bills with maturities between 1 and 3 months, providing short-term exposure to U.S. government debt. How does BIL ETF generally mitigate credit risk? Answer: C. By holding U.S. Treasury bills. Explanation: U.S. Treasury bills are backed by the full faith and credit of the U.S. government, which virtually eliminates credit risk for the ETF. Which of the following best describes the yield of BIL ETF? Answer: B. Variable yield based on market conditions. Explanation: the yield on the BIL ETF is variable and reflects the yields of the underlying short-term Treasury bills, which fluctuate with market interest rates. What type of investor is BIL ETF most suitable for? Answer: C. Conservative investors seeking capital preservation. Explanation: BIL ETF is designed for conservative investors looking for a safe place to park cash with minimal risk, as it invests in short-term U.S. Treasury bills. Which index does the BIL ETF track? Answer: B. Bloomberg 1 to 3 month U.S. Treasury bill index. Explanation: the BIL ETF tracks the Bloomberg 1 to 3 month U.S. Treasury bill index, which measures the performance of U.S. Treasury bills with maturities between 1 and 3 months. What is the typical expense ratio of BIL ETF? Answer: A. 0.10%. Explanation: BIL ETF has a low expense ratio, typically around 0.1%, making it a cost-effective option for investors seeking short-term exposure to U.S. Treasury bills. How does the BIL ETF generally handle interest rate risk? Answer: C. By focusing on short-term Treasury bills. Explanation: by investing in Treasury bills with maturities of 1 to 3 months, BIL ETF minimizes interest rate risk compared to longer duration bonds. In terms of liquidity, how does BIL ETF generally perform? Answer: C. High liquidity. Explanation: BIL ETF typically offers high liquidity, making it easy for investors to buy and sell shares with minimal price impact due to its focus on highly liquid U.S. Treasury bills. What is a major benefit of including BIL ETF in a diversified portfolio? Answer: C. Preservation of capital and liquidity. Explanation: including BIL ETF in a portfolio provides a safe, liquid asset that helps preserve capital and can be easily converted to cash, contributing to overall portfolio stability. What is the role of BIL ETF in cash management strategies? Answer: C. Cash equivalent with low volatility. Explanation: BIL ETF serves as a cash equivalent in cash management strategies, offering low volatility and easy access to funds while earning a modest yield from short-term Treasury bills. How frequently does BIL ETF distribute dividends? Answer: A. Monthly. Explanation: BIL ETF distributes dividends on a monthly basis, reflecting the interest earned from the underlying Treasury bills. What is the typical risk profile of BIL ETF compared to equity ETFs? Answer: C. Lower risk. Explanation: BIL ETF has a lower risk profile compared to equity ETFs because it invests in short-term U.S. Treasury bills, which are considered very low-risk investments. What impact do rising interest rates typically have on the performance of BIL ETF? Answer: C. Minimal impact. Explanation: rising interest rates have a minimal impact on BIL ETF due to its short duration holdings, which are quickly rolled over into new bills reflecting the higher rates. How is the NAV, net asset value, of BIL ETF determined? Answer: B. Based on the market value of the Treasury bills held. Explanation: the NAV of BIL ETF is determined by the market value of the U.S. Treasury bills it holds, reflecting the current prices of these securities. What kind of market environment is BIL ETF most suitable for? Answer: D. All of the above. Explanation: BIL ETF is suitable for any market environment as it provides a stable, low-risk investment option, making it valuable during both stable and volatile periods. Can BIL ETF be used as a hedge against market downturns? Answer: B. Yes, because it offers capital preservation. Explanation: BIL ETF can be used as a hedge against market downturns due to its focus on short-term U.S. Treasury bills, which preserve capital and offer stability during volatile periods. What is the primary regulatory body overseeing BIL ETF? Answer: B. Securities and Exchange Commission, SEC. Explanation: the BIL ETF, like other ETFs, is regulated by the Securities and Exchange Commission, SEC, which oversees securities markets in the United States. What is a key difference between BIL ETF and a money market fund? Answer: C. BIL ETF trades on an exchange. Explanation: unlike money market funds, which are mutual funds, BIL ETF trades on an exchange, offering intraday liquidity and the ability to buy and sell shares like a stock. How often does BIL ETF rebalance its holdings? Answer: A. Daily. Explanation: BIL ETF typically rebalances its holdings daily to ensure that it maintains its target duration of 1 to 3 months for the Treasury bills it holds. Which of the following is a potential drawback of investing in BIL ETF? Answer: C. Low yield. Explanation: a potential drawback of investing in BIL ETF is its low yield, which may be less attractive during periods of higher inflation or rising interest rates. What does the SPDR in SPDR Bloomberg 1 to 3 month T-bill ETF stand for? Answer: B. Standard Poor's Depository Receipts. Explanation: SPDR stands for Standard Poor's Depository Receipts, which is a family of ETFs managed by State Street Global Advisors. How is the BIL ETF's performance typically measured? Answer: C. Against the Bloomberg 1 to 3 month U.S. Treasury bill index. Explanation: the performance of BIL ETF is measured against the Bloomberg 1 to 3 month U.S. Treasury bill index, which it aims to replicate. What is the primary issuer of the securities held by BIL ETF? Answer: A. U.S. Government. Explanation: the primary issuer of the securities held by BIL ETF is the U.S. government, as the ETF invests in U.S. Treasury bills. In what scenario might an investor prefer BIL ETF over a longer-term bond ETF? Answer: B. When expecting interest rates to rise. Explanation: an investor might prefer BIL ETF over a longer-term bond ETF when expecting interest rates to rise, because short-term Treasury bills are less sensitive to interest rate increases. Which fund management company oversees BIL ETF? Answer: C. State Street Global Advisors. Explanation: BIL ETF is managed by State Street Global Advisors, one of the largest asset managers in the world. How can the purchase of BIL ETF affect an investor's cash holdings in a portfolio? Answer: C. Preserve capital with low volatility. Explanation: purchasing BIL ETF can preserve capital with low volatility, making it a suitable option for maintaining cash holdings within a portfolio. What is the tax treatment of the interest income generated by BIL ETF? Answer: C. Subject to federal income tax only. Explanation: the interest income generated by BIL ETF is typically subject to federal income tax only, as it is derived from U.S. Treasury bills. Why might an investor choose BIL ETF over directly purchasing U.S. Treasury bills? Answer: B. For ease of trading on an exchange. Explanation: an investor might choose BIL ETF over directly purchasing U.S. Treasury bills for the ease of trading on an exchange, which provides greater liquidity and flexibility,